The latest company to get hit in this lending crisis, Capital One. Welcome, Jim Cramer.
Hi.
This is Wall Street Confidential. What is going on with Capital One?
I think Capital One's an interesting situation, potentially a buy.
Oh, really?
Yeah, well, because the big problem had been, first there was a problem in London, and they solved that.
Yeah.
Now the problem is this mortgage business, and they've gotten out of that. But they really stumbled in this North Fork Bank acquisition because they didn't really understand the mortgage market. They really understand credit cards. And what they wanted to do was just develop a steady source of money to be able to back up a deposit base. They had done it in Hibernia and New Orleans, and then they had done it with Greenpoint / North Fork. And they got this mortgage business as part of it. And I remember speaking with the CFO offline. He said, listen, we really don't understand the mortgage business. Well, it is hard to understand. They bought it at the top. They've taken the write down. Why I'm interested in it is because the credit card business is holding up much better than the housing business. And that's because it makes economic sense to walk away from your house, but not from your credit card. Walk away from your house, you go back to renting. But you got to keep your job, so you keep your car. And you got to be able to spend, so you keep your credit card. So the house is the expendable item. Typically what happened in 2005 and 2006 is you took a loan for 100% of the value, and then you took a home equity loan for 25% of the value. So you have 125% of the value in loans. Then the house drops 10%. It makes just a great deal of sense to walk away from those, but you don't want to lose your credit card. If you keep paying your credit card, your rating goes fine. So Capital One's actually in a pretty good position.
One thing to add to Capital One, last week, actually, we broke at thestreet.com that they were raising the rate, the APR, on their credit cards. And it was in the context of the market sliding, the credit crunch.
That's great. The short-term rates are coming down. The credit card rate is going up. The net interest margin is just going to be gigantic. Capital One did throw away $2 billion buying back their stock higher. I'm not happy about that. But this is the first time I owned Capital One for ActionAlertsPlus.com, and I decided to get out of it, break even, basically, maybe down a point or two, because I felt that I had no confidence in this mortgage business, nor did they. Now that the mortgage business is gone, Capital One becomes quite an interesting situation. It's basically a pure play on credit cards with a steady deposit base where the net interest margin is gaining and people don't want to sell their credit card. I would be a buyer of this stock here.
All right,
That's quite a different view from everybody else.
Well, if you want to take a closer look, folks, the ticker is COF. Thanks a lot, Jim Cramer, for that. Wall Street Confidential on thestreet.com TV.